Hello and welcome. You are watching First Take here on News 9, where we bring to you the morning buzz on the Lal Street. I am Suyash Maheshwari and with me is Amit Ranjan. And it's a Tuesday morning in the markets. They have once again opened in the green. Nifty has in fact opened with modest gains of about 35 odd points. But since then we have reclaimed 22,700 odd levels, and now we are just about 70 points shy from the record high levels, or about 0.5% away from there. Now, I mean, considering the recent form that the markets have found themselves in, we should get there pretty soon. But the question is, who will provide that nudge? Yesterday, it was the banking stocks that took the market higher. Remember, Nifty Bank scaled a record high in yesterday's trade, witnessing one of its best sessions in 2024 with a surge of over 2.5%. But they are essentially flat today. So, who will it be? It looks like auto stocks, they have assumed the role, and this is because the auto data for the previous month will come out today, which is May 1. So auto data for April will come out today, and reading brokerage report, it looks like most of them are expecting a healthy 15 to 18% jump in volumes in sales for some of these auto companies, including Bajaj Auto, TVS, Hero Motor. So most of them are two-wheeler names. So perhaps that is driving the markets, and that could take us to record high levels. We are still away from about 0.5% away from there. But before we get into what can drive the markets further and what will be the key triggers that you would need to watch out for, let's look at what we got in terms of a handover from the global markets, because Amit, it's green again.
It's green again everywhere, a sea of green, and China has been in the news. I'll go to the Western markets first. Dow Jones closed in the positive at 0.38%, S&P 500 in the positive at 0.32%, Nasdaq in the positive at 0.35%. European markets, stocks was moderately muted in the positive at 0.07%. Hang Seng this morning in the positive at 0.19%, and Nikkei 2 in the positive at 1.21%. China's PMI numbers came, and for the second month in a row there was a back-to-back expansion. It comes, China's factory activity expanded for a second month, the best streak in a year, bolstering hopes that the second largest economy has legs to grow after the measures that the government took. So that is what we got from the handover. It is China in the news, but a green everywhere.
All right, positive start for the day of trading, and again the setup overall looks rather bullish, because equities are in the green, and bond yields and other cues. Oil prices, they have receded and they are back hovering around that $88 a barrel mark, and I'm talking about Brent crude over here. The bond yields in the US at 10-year, that has come down by another 5 basis points, and it's around that 4.6% mark, and the dollar index has also fallen below 106 levels. So equities rising, bond yields falling, the dollar index falling, and crude falling. I think overall the setup for an emerging market like India, it's it's very positive, and again that is reflected in the start that we have had. Nifty is trading above 22,700. We are just about 70 points shy of record high levels, so less than 1% away, and it looks like that the auto stocks, they are providing that much needed nudge. But let's also bring on board Mr. Brijesh Ail of IDBI Capital Markets. So thank you for joining us here on News 9. Good morning to you. And again, a phenomenal run Nifty has been on in the last 7 sessions. We are just about 70 odd points away from record high levels, essentially there, considering how the markets have moved in the last a couple of weeks. What's the next big level that you are tracking? 23,000 or maybe much beyond that?
Good morning, Suresh. So yeah, definitely. I think we are in uptrend, and data clearly says that we should be riding this momentum. I will be talking of precisely, this is the technical level, 23,100. So I believe if not 23,100 is the level from the technical. This is the price extension which I'm watching on the daily time frame. So I have a very clear idea that 23,100 will be tested during maybe this week or maybe in the next week. But then definitely that level will be safe. On the way down, 22,200, 250, which is the 52 moving average, will be the now immediate support level. Just in case if there is some profit booking, maybe tomorrow there is a holiday, and this being a truncated week, if there is some correction, because I believe Bank Nifty, which has moved very sharply yesterday, that 1200 point, they can see some, today is a Bank Nifty expiry. So 49,500, there is a lot of call writers are there. So there is a slight probability that we might see some resistance in Bank Nifty, because of which Nifty might not move that aggressively. But any dip in both Nifty, Bank Nifty is a buying opportunity. 50,000 for the Bank Nifty and 23,100 for the Nifty. I'm extremely positive.
Good morning, Brijesh. Now, Tata Chemicals announced their results and they were disappointing to say the least. They recognized a non-cash write-down of assets aggregating to a total of 963 crores in the soda ash and bicarb operations in the United Kingdom. Now, this is being spoken as the primary reason for the losses. The revenue came down 21.1%. Net profits were actually down. There were losses of 841 crores. EBITDA came down almost 54% in the quarter gone by year on year. The stock today has been down about 2.4%. What do you make of Tata Chemicals? Is it the sector, the low demand from Europe, low pricing? What is the real reason for this big loss that they have posted this? And is it just one time, or do you expect it to continue in the quarter to come?
No, I think it's too early to comment, but then I believe this can be a one-time thing, and whatever the opportunity what we are seeing because of this particular reason after the post result, the stock is corrected, and I believe this should be an opportunity to re-enter, because if I take it from the technical perspective, if I do look from the weekly and monthly charts, I'm quite bullish on the Tata Chemical. It's a long-term bet, so this remains a very good buying opportunity. 1,000 is the level which I don't think will be broken very easily. So whatever the declines we are seeing in the last couple of days, I think we should be. If somebody wants to play long-term bet, definitely this is a bet. And somebody wants to trade the trading kind of opportunity somewhere another 25-30 points closer to maybe 1,040-45 levels with a mark of 30-40 points risk. I think even those people can play this Tata Chemical, since we have the entire month, May month with in our hand. I am pretty confident with both the angles we can play the long trades, and whatever the news it is there, it's already discounted. I expect some rally. What we saw in the start of the month of March, we saw a very good rally in Tata Chemicals. I think we should be seeing those kind of rally again. Quite bullish on Tata Chemical.
Alright, the view is bullish on Tata Chemicals, especially for the long term. But another stock, and another company that came out with its Q4 numbers was Ultratech Cements. And Ultratech Cements posted a very healthy set of numbers, Brijesh, for the March quarter. It has beaten street estimates on both top line as well as bottom line. Volume growth was robust on the back of healthy demand, and margin expansion was sound. This was, of course, because operational costs came down, especially considering a favorable movement in oil prices. Now, looking at the stock, about a 2% gap up opening today, but we have come about a percent from those levels. The stock is currently trading about 0.7% higher, around that 10,035 mark. But remember, we saw a 3% rally on Monday, which was also backed by healthy volumes. But Brijesh, coming to you, we are just 2% away from that big hurdle of 10,270, 280 odd levels. The stock has failed to break past those levels since I think late January. Is it possible this time? The numbers are good.
Definitely, Suresh, this is one of our fundamental pick, and we are valuing 16x for the FY26 estimates, and our fundamental target is 11,844. This is what our fundamental target is, and if I combine it with the technical perspective, I'm pretty confident that this will see 10,008, 500, 600 points from the technical perspective on an immediate basis. And the long-term perspective, maybe the fundamental target is 11,844. So directionally, it's pretty good. Anybody who takes a long position should maintain, from the technical point of view, 9,700 would be a safe bet. With that stop loss, I think one should play for 500, 600 points on the higher side. Slight corrections, we can look to re-enter the positions. Ultratech is looking positive on charts.
So Ultratech looking directionally pretty good according to you. But Brijesh, what are your picks for our investors today?
So again, it's from the mid cap space. Like Gabriel India is something which has given a very good volume breakout in yesterday's session. I think that momentum is going to be. We'll see that good momentum. I'm talking of another some like 10-15% kind of a gain. One should go long at current price with a stop loss of 352 for the target of 425. Next one is the Bank of Maharashtra. Results came, everything looks quite positive on charts. I think this can be a trade with the with the current price, the stop loss of 64 for the target of 85. And lastly, on one more trade on Jamuna Auto, again a very good bottom form sideways consolidation and a good volume breakout. And I think one should go long at current price with a stop loss of 132 for the target of 160. This is a little bit of positional trade. The time frame would be 10-15 days kind of a structure.
Alright, those are the top picks from Brijesh Iyer for the short term. Sir, thank you for your time. Thank you for your insights. Always a pleasure speaking with you.
Thank you.
But before we slip into a short break, let's look at how the markets are doing, because we are moving higher. Nifty, in fact, is very close to its intraday high. Currently, it's sitting at around 22,720 marks. So we are just about 55 points away from the record high level, or about 0.3% away. But we were talking about how auto sector and auto stocks could provide that much needed impetus to the market to perhaps take out and have that last leg of rally and perhaps move higher from there on. Brijesh thinks that we can test 23,100 odd levels. We are about 400 points from there, so we'll see to that. But the first key hurdle is 22,775. That needs to be taken out. But coming back to the auto stocks, I'm looking at the top contributors for Nifty today, and if you look at again the Nifty contributors, Mahindra, Maruti Suzuki, Tata Motors, three stock alone are responsible for about 30% of Nifty's gains today, this morning at least. Mahindra is up over 4%, Maruti is up over 2.3%, and Tata Motors is up 1.5%. But remember, the outlook that that came out from brokerages is very strong for two-wheeler space. They expect a very healthy 15 to 18% jump in sales volume for the month of April. For the two-wheelers, the passenger vehicle, for the four-wheelers actually, the passenger vehicle segment is expected to do well. But then again, we need to see how the commercial vehicle space is gonna do, because again, remember, in the past year, 15 months, that has been a pain point for the entire sector on the whole. And I mean, considering the kind of tremendous rally auto stocks have seen, I think if that pocket of the of the market of the auto sector gets on the mend, especially considering that the monsoon is expected to be decent this time around, I think that could provide that further fillip that auto stocks need to rally from here on. But again, this morning they are provided that strength, they are providing that nudge and taking the market higher. Nifty Bank, that was a key driver of the markets yesterday, is essentially flat, but remember, we are defending some key support levels. Again, we are in uncharted territory, just about 600 points from that big 150,000. Whether we get there, we'll see. The big names will definitely have to support and give that push on the upside. But on that note, let's take a short break. On the other side, Kranti Bhatini of Wealth Mill Securities joins us.
Film and entertainment is definitely one of the levers for any country to build its brand.
We are getting global. I feel that we're just on the takeoff.
More and more films are becoming language agnostic.
Content is a universal language.
There's one audience in the world.
Absolutely. End of the day, we all are like brothers who have mutual respect for each other from a different land.
This and more. Streaming on News 9 Plus. Subscribe and get free vouchers.
Currently, the industry is facing a lot of challenges as far as demand is concerned. Basically, the US markets has slowed down because of high inflation.
So obviously, diamonds being a dream product, something which doesn't have a utility value or is seen as a luxury. So that obviously goes off your shopping list. That's the first item that will go off your shopping list, especially in recessionary trends.
That lab-grown diamonds are not mined and they do away with the entire mining. So they save up on all the environmental damage that is associated with mining, and of course, the mining cost, which is why they're even more affordable.
People that is impacted by all these recessions are the artisans, are the people who work in this industry, right? But I think lab-grown diamond has allowed them to actually use their skills in the same product.
This and more streaming on world's first news OTT, News 9 Plus. Download now.
We are trying a lot of experiments, innovations and ideas.
We came out with a new format in audio, which is audio series.
Listening for content-oriented company in India, which is a very unique proposition.
When we look at audio in general, we had music, which is like extremely old format, and then we had podcast.
A natural extension to Pocket FM is to move from Hindi to regional content. I think I'd love to see their FY24 numbers, which they claim will be close to 1,000 crores. I think there are talks of them to raise another $80 to $100 million of funding.
This and more. Streaming on News 9 Plus. News is now content. Subscribe and get free vouchers.
जानना है तो देखिए, समझना है तो सुनिए, सीखना है तो पूछिए, और कमाना है तो खरीदिए। जानकारी, सलाह और निवेश सब एक ही सुपर ऐप पर। पैसे का सवाल है तो जवाब है मनी 9। आजादी पैसे की, अभी डाउनलोड करें।
The football is mother of all games.
It is a team sport.
The leadership attitude is taking the ownership.
It's always a big responsibility to take decisions and the right decisions.
I always question the stereotypical.
And that's why you are in that position.
This and more. Streaming on News 9 Plus. Subscribe and get free vouchers.
Welcome back. You're watching First Stick here on News 9, and we are talking markets because again we are very close to hitting that record high level on Nifty. We have, since we went to break, in fact, Nifty has moved even further and we are just about 30 points away from the record high. But also let's talk about the broader markets because they are already there. Nifty mid-cap index has, moved past 51,000 for the very first time. The small cap index has taken out 17,100 for the very first time as well. Both indices are up about 0.5% also. But again, the overall texture of the market is looking, the breadth of the market is heavily favoring the bulls. The global cues are much more supportive. I mean, the texture again looks very positive just ahead of a holiday. Remember, tomorrow is a market holiday on account of Labor Day, Maharashtra Day, and we also have some key data releases yesterday. Again, auto sales data will come out. Also, US Federal Reserve policy decision will also be announced later in the evening. We'll only get to react to it come Thursday. Now, the broader expectation is that Mr. Powell is expected to hold the interest rates constant once again, but again the street will keenly tune in for what Mr. Powell has to say. Remember, he was the first one, at least in the long list of commentary and the statements that have been made in the past couple of months, to say to give out a dovish stance and put out that 3 rate cut expectation for the market for this year. Since then, a lot has changed. Inflation hasn't come down. In fact, the data has come in hotter than what the Fed was expecting. So, 5 or 6 data that back-to-back data releases that have come in hotter than expectations. That has really changed the narrative. And if you look at it, it's actually a complete U-turn from there on. Most voting Fed members are now saying that perhaps not only will we not see a rate cut this time, maybe we see a rate hike. I mean, where do we go from there, and what happens? What does RBI decide to do? A lot of it maybe, at least again, the expectation is that Mr. Powell is going to maintain the rate cut, but in what he says, we'll try to find answers as to what RBI is going to do next. I think because again, look at what is happening in India. The economic data that is coming out is much stronger. Inflation is cooling off nicely. So, you know, the time is ripe for us to cut interest rate and provide that much needed fillip, because if you remember, one of the problems that has been with Indian economy is that consumption has been lacking, especially from the rural side of things. And I think interest rate cut could really provide, could really help in bringing back demand, at least on the rural economy side of things. But let's also bring on Kranti Batini and have his thoughts on things. Kranti sir, thank you for giving us time here on News 9. And again, market has been on a tear, you know, like since the last time we spoke, we have rallied another 350 points, essentially at record high levels. The big question, of course, everyone is asking, how much further can we go from here on? Is 23,000 the cap, or can we perhaps take out 23,300, 400, 500? What's your opinion of things? How are they looking from your point of view?
Yes, good morning. Market have a tendency to surprise everyone. As a couple of weeks back, when we are anticipating a consolidation phase, market has been showing its strength, and Nifty has been in a range, in a very positive range from 22,200 to right now we are inching towards 22,700. If market could able to sustain about 22,700, we can expect some more rally in the market. That means market is anticipating the policy continuity, and also the earnings season. Market has expecting a positive earnings season, and the earnings are in line with the market expectations. And also the next coming few months, okay, the policy decisions of the new incumbent government, how they are going to take, because there is a anticipation that there will be a policy continuity in the market. And next, we are going to have a full-fledged budget. What are the main things that comes out of the budget? These are the key themes revolving around the market at this point of time. Thanks to the geopolitical issues, they have been de-escalating. Crude has been there was a lot of apprehension for the Indian markets in the initial stage. Crude is going out of the way, but crude is currently in a consolidation phase, and the domestic economy is doing great guns. All the data that is in favor of the market. So all these the domestic parameters have been helping the market to sustain in a positive territory.
Alright, domestic parameters helping markets sustain in positive territory. Also, lack of news from Middle East is being perceived as good news. But coming back to our domestic markets, Kranti, the recent push has come from banking stocks, and one of the stocks that has been in focus lately is State Bank of India. I mean, SBI has been on a tear lately, right? It has rallied close to 10% in the last 1 week. It's now at record high, and of course, the rallies on the back of reports suggesting that SBI is likely to sell its 25% stake in Yes Bank as a lock-in period has ended in March. As from what we hear, SBI has also received government approval for the same. Now, Kranti, my question to you is, considering that this sale goes through, do we see more upside in the stock, or is it already priced in? I mean, because we have seen about a 10-12% jump from the recent low in SBI. What's your take?
Suresh, we need to wait and watch how SBI is going to play its card with respect to S Bank is concerned. Okay, they are in a hurry, or they are going to be in a wait and watch mode. That's what we need to wait and see towards the S Bank as a proposition is concerned. Coming back to the core business of State Bank of India, the core business is going to be very encouraging. What we witnessed, the good numbers, good set of numbers that came from ICICI Bank, in line with that numbers, okay, we can see the same kind of strong set of numbers in State Bank of India. It's more towards the earning, and also the subsidiary businesses of State Bank of India has been doing very well. The bank is in a right shape right now, and I can see some kind of outperformance that's going to continue in State Bank of India in next coming quarters also. But S Bank is going to be one of the tricky issue going to be. We need to see how the State Bank of India going to play the cards with respect to S Bank is concerned. So I don't want to comment with this corporate action at this point of time. But I'm also crossing my fingers how they're going to do, because they are a very strategic investor in S Bank. So how they are going to play the card, we need to wait and watch.
Alright, how they are going to play their card, and we are talking about SBI on Yes Bank stake sale, we need to watch. But also wanted to pick your brains on, considering the recent and the constant interventions by RBI on private bank and NBFCs, would you say that PSU banks are a better play on the banking theme, considering that they are less vulnerable to these regulatory lapses? And I mean, are they really less likely to fall under RBI's scanner in the first place, Kranti? Your thoughts?
Very interesting question, Shreyas. On a longer term perspective, okay, given the kind of the price variation, the earnings variation between the private sector and the public sector banks, what we witnessed in the last couple of quarters, the valuation gap has been bridging up. The gap has been narrowing at this point of time. So, what we can see is the private sector banks, they always, the template for private sector banks has been strong technology and also strong productivity. So right now the PSU banks are going one notch ahead, and they're improving their technology and the capabilities, and also employee productivity is the key focus area, key KPI for the public sector banks also. So the gap has been narrowing down, and also the banks are quite aggressive in terms of using the technology. That's what helping the public sector banks, and what we can see is that is making them to outperform at this point of time. So if the investors have high risk appetite, one can look into public sector banks on a longer term basis, because the valuation it looks still attractive for many of the public sector banks. If the investors have a very less risk appetite, okay, they can continue to hold on to the private sector banks. In terms of the compliances, sir, concern, as you rightly mentioned, there will be the banks has to, even though despite of we say what happened in Kotak Mahindra Bank, every bank has to look back their standard operating processes and their compliance regulatory systems are concerned. So this is an ongoing exercise, but every bank has to revisit the regulatory norms on a day in and day-to-day basis.
All right, that's a word from Kranti Bhatini. But sir, hold that thought. We have plenty more to discuss with you, but for now, it's time to take a short break.
Currently, the industry is facing a lot of challenges as far as demand is concerned. Basically, that US markets has slowed down because of high inflation.
So obviously, diamonds being a dream product, something which doesn't have a utility value or is seen as a luxury. So that obviously goes off your shopping list. That's the first item that will go off your shopping list, especially in recessionary trends.
That lab-grown diamonds are not mined, and they do away with the entire mining. So they save up on all the environmental damage that is associated with mining, and of course, the mining cost, which is why they're even more affordable.
People that is impacted by all these recessions are the artisans, are the people who work in this industry, right? But I think lab-grown diamond has allowed them to actually use their skills in the same product.
This and more streaming on world's first news OTT, News 9 Plus. Download now.
Welcome back. You're watching First Take here on News 9, and before we went into the break, we were talking about the valuations of the the private banks and the public sector banks. And one would think that after this exorbitant rally that we have seen play out in some of these public sector banks, the valuations will be like really expensive. But the private sector banks, just for context, they are trading in a the the price to book value of about 2.96. It's on HDFC Bank, Axis Bank is 2.77, ICICI Bank 3.8. Now in comparison, your public sector bank, State Bank of India, is at just 2.07, Punjab National Bank is at 1.49, Bank of Baroda is at just 1.35. So I think despite this big rally that we have seen, the valuation comfort is still there. At least that what the metrics suggest. The price to book value, those are still in favor of the public sector bank. But we'll move on. We are in the midst of the earnings season, and Amit, I'll come to you first. No Nifty 50 companies reporting the numbers today, but we have two big ones from the Adani stable. Tell us about them.
The first one, thank you, Suyash. The first one is Adani Energy Solutions. Now that they are supposed to post their results today. According to going by their performance, they have seemingly received a letter of approval for an additional quantity order of 1.7 million meters of pipeline from Maharashtra State Electricity Distribution. This will be worth an additional 2,100 crores of rupees. The total pipeline under construction stands at 22.8 million smart meters, consisting of 9 projects with a total contract value of as much as 27,200 crores. In the distribution business, Adani Energy Solutions has sold 2,226 million units in the quarter gone by, as against 2,100 million units in the same quarter last year, owing to the uptick in energy demand. Its share in the renewable power supplied in the Mumbai circle stands at 35%. They are aiming at 60% by financial year 2027. So all good, numbers looking good for Adani Energy Solutions. Suyash, I would like to take it to you from here.
All right. And Kranti, I'll come to you. Now the stocks, they have Adani stocks, they have pretty much consolidated. I mean, some of them, at least the flagship ones, Adani Enterprises, has not done much, and a lot of us speculated that in this run up to elections, maybe some of these stocks will come into focus. What's your take over here? Are these stocks looking expensive? And let's talk about 3 in particularly: Adani Enterprises, Adani Ports, which has done phenomenally well actually, and Adani Power. What's your call, sir?
Yeah. Majority of these businesses are infrastructure-centric businesses. There is some apprehension. These stocks have been high beta stocks, and also we need to see how the results are going to be panned out. These business models are more about futuristic and fully priced in stocks, and also these stocks have a tendency of erratic moves. What we witness in these stocks, but in the last couple of quarters, what we are witnessing is, after these stocks made their bottom, after these the entire saga of Hindenburg news has erupted, and the SEBI order, then Supreme Court decision, these stocks have formed a base at this point of time. Now, here onwards, how their order wins and also the earnings that are going to lead these stocks. But one thing investors need to keep in mind: these stocks have a tendency of moving in making a higher ups and downs for every movement because of the high beta nature of these stocks. There are some business models quite strong, like Adani Ports and all. The valuations are, on a longer term perspective, they look attractive, even in terms of their cement businesses are concerned. Adani Transmission is coming. It was earlier called as Adani Transmission, formerly right now Adani Energy Solutions. The stock has corrected, and it's forming a base around that 1100 to 1200 range. That's where the stock consolidating at this point of time. So high risk appetite investors, given the kind of the futuristic infra businesses, all these businesses are there in, one need to continue to hold on to their position. But these stocks are suitable for the high risk appetite investors.
Mr. Bathini, do you see a lot of action focused in in Adani Total Gas, with lots happening in the EV space, and they have recently gone into a memorandum of understanding with MG Motors to expand EV charging infrastructure across India. So do you see lots of action happening in this Adani company in the year to come?
Definitely. How the policy decisions are going to be, we need to wait and watch. A lot of interesting action is taking place in these EV, green hydrogen, and alternative energy spaces are concerned, where Adani Group companies operates, Adani Gas and all. So one need to watch this space interestingly, how the next couple of quarters the policy making towards these sectors are concerned. It is more about futuristic at this point of time. That's the reason investors who have a high risk appetite, one can look into these kind of business models.
All right, the business model of a lot of Adani companies looks futuristic. So maybe if you have a high risk appetite, bet on them. There are 10 to choose from, but that's a word coming in from Kranti Batini. Sir, thank you for giving us time here on News9. Always a pleasure speaking with you.
Thanks, Yash. Always my pleasure to share my views with the viewers of News9. Thank you.
But before we wrap things up, let's look at where the markets are, because Nifty has actually retraced from its the intraday high. We got to 22,754. Currently we are at 22,727. So nothing major. Again, the mood of the market, the overall it looks like the texture is on the positive side. We are very close to record high levels. The broader markets are there. The mid cap index is up 0.5%. It has claimed 51,000 for the very first time, and the small cap index that has actually been the strongest segment of the market in this run up. It has been hitting record high levels for the last 5 sessions in a row. Again, it made a new fresh record high of above 17,100 levels. It has given up paired some of the early morning gains, but still trading above 17,000, and that's on small caps. India VIX, that has picked up. It's nearing the 13 mark. It's up 6%, but considering that the markets are shut today on account of Maharashtra Day, and when we come back on Thursday, we'll have the decision from the US Federal Reserve on what they are going to do as far as interest rates are concerned. So I think the markets is a little bit nervous going into this into this holiday, but again, I think the broader expectation, at least coming from Mr. Powell, is that rate cuts are going to be maintained. But remember, again, as we also pointed out earlier in the show, that Mr. Powell was the first one who put out this dovish outlook that we can have perhaps 3 rate cuts down the road in calendar 2024 itself. But considering the kind of data that has come out, look, just a couple of days back, the economic data for the first quarter of 2024 that came out, economy, the growth was significantly slower than what the expectation was. I think it came around 1.8% or something, considering to a rise of about 2.4% on a quarter-on-quarter basis, on a year-on-year basis actually, and inflation that picked up from 1.8% to 3.4%. So the economy is facing pressure from both sides, and that is perhaps really going to make it difficult for Federal Reserve to go ahead with its monetary easing cycle. But we'll see what happens that when Thursday comes. For now, it's time to say goodbye, and we'll see you at 4 p.m. on Last Check and see how the markets have fared. Have we got to record high levels or not? But coming up next is World Business Report.